So just gone through 8:30 now in New York, so we'll just take a recap of the markets heading into the US Open for Wednesday 19th of August 2009. At the moment it's been pretty much a risk adverse day, which started off firstly in the Asian markets, where the Shanghai Composite in particular did prompt the whole risk adverse trade this morning. The Shanghai Composite fell as much as 5% in the last hour of trade and closed down just around 4.5%, but officially from August 4th the decline has now reached 20%, which officially signals technically that the Chinese main stock index is in a bear market. Much of that was on rumours that the Vice Premier Wang Kushan had held meetings with regulators in regards to tightening policy going forward, as one of the main reasons touting that move lower. Taking a look then at the moment, the US index futures, following in tandem with the European markets in terms of equities, are indicated lower by around 1% at the moment. And on the data front, we have already seen the US MBA mortgage applications did give a slight relief to the stock futures, but again nothing sustained. It came out on the week of August 14th at 5.6% against the previous at -3.5%. That allied as well to some pretty upbeat comments and quite a stark beat on the EPS number out of Deere & Co in the US. So they're also worth keeping an eye on when the equities open on Wall Street a bit later on. Elsewhere, in terms of things that have happened this morning, one of the other major events was out of the UK markets with the Bank of England August meeting minutes, which indicated quite a split decision of 6-3 in terms of increasing the QE programme in the most recent interest rate decision. Of the three included, Mervyn King actually wanted an increased size of 75 billion, and in turn market speculation now turning to whether the QE will indeed go further than the current 175 billion ceiling. Gilt futures did spike on the news and are outperforming T-notes and EGBs at the moment. Looking elsewhere, the dollar index has remained in positive territory. We're currently up 0.3% at last check, and that has reflected across the major pairs with euro dollar, and also the pound, obviously with the QE, that's latest minutes being under pressure. Cable again seeing a quite significant volatile trade, down over 100 pips this morning. Also on a similar note to the pound weakness was an article from the Conservative Party leader David Cameron in the UK, who in a Daily Telegraph article opined that the UK may not be able to keep up with the amount of debt burden that is currently ongoing at the moment. Looking ahead then, for today's calendar, it is pretty quiet in terms of US economic releases. The only thing of note will come for energy traders. We'll see the Department of Energy crude oil inventory stockpiles after we saw quite a surprise drawdown in the API numbers after NYMEX pit close yesterday. Other than that, we'll be eyeing reverse auctions. The Bank of England targeting the shorter end today. Results for that at 2:45 London to 8:45 in Chicago. And then we'll see a Fed outright Treasury coupon purchase today for Fed 2020 to Feb 2026 maturities. That'll be due usual time results just after 4 o'clock in London, so just after 10 in Chicago.